Good morning and welcome to the Killik & Co market update. Good news out yesterday. Trump is now pursuing a trade deal with China. Here's the tweet in which he announced the news. Nothing concrete as yet, but I think markets are reacting very positively just to the idea that both sides are willing to try and come together. So Asian markets up very strongly overnight and European markets up today. Now this idea of the trade war has been one of the key issues worrying markets over the last month. Earnings season actually has come out with some very good results, but there has been a lot of commentary and forward guidance of company directors saying they are worried about the uncertainty caused by this trade war. So any sort of hint that these two sides are willing to come together is definitely going to be a good thing for markets. Now, one of the knock-on effects of this trade war has been a very severe weakening in the Chinese currency. So here's the chart of the Chinese currency against the dollar over the last year. As you can see, it has come down quite heavily, more than 10% in fact, but when that tweet came out yesterday, you can see there is a very small strengthening in the currency at the end of this chart here. So if we do go ahead with some sort of trade deal, it is likely that Chinese currency could strengthen further. Now this week, currency has been having a knock-on effect on other areas of the market. Because the currency is so weak, it has dampened Chinese imports because it becomes more expensive for them. China used to import quite a lot of cars from Europe, for example, and that demand has really fallen because Chinese currency is so weak. So we could potentially see a bit of a turnaround there if we do get to some sort of trade deal. Now, one thing to bear in mind is the timing of this tweet and the timing of this potential negotiation is a little bit suspicious because we are heading towards US midterm elections. Now, Donald Trump has consistently used the S&P 500 or the US stock market as a barometer for his own success, and he has consistently said, the market is up because I am doing so well. So you can imagine he is not particularly happy that the market has fallen so much 5 days before the US midterm elections. So the fact he's come out with this tweet just a few days before those elections is a little bit suspicious, and we are perhaps wondering what his motives are there. So that's just one thing to bear in mind. Also this week we've had the UK budget on Monday. As expected, there are no major changes, and that's not too surprising because it's very difficult for the Chancellor to make any major changes in the run-up to Brexit. But it does appear that he is trying to end austerity, and we have got some policies which are fairly expansionary and could go some way towards boosting UK economic growth. Here I've got a few examples of some policies that have potentially moved markets this week. The first one is an increase in disposable income. So Hammond has raised the national living wage, he's raised the personal allowance, and he's raised the threshold for higher rate income tax. All of those things should put a bit more money into people's pockets, and that should go some way to raising economic demand in the UK. So that's definitely good news for the UK markets. Housing and infrastructure. So Hammond has extended the UK's Help to Buy programme to 2023. This has been one policy that's really supported house builders over the last few years. So those shares were up quite heavily on the news that this scheme will be extended. He's also put a fair amount of money into a new housing and infrastructure fund. So again, that is good news for UK house builders. And defence spending, along with many other countries, he has committed to raising defence spending, and that's along with many other countries within NATO. He's also reduced business rates, definitely good news for the UK high street. There has been a lot of talk recently about the unfairness between physical stores on the high street and online stores which don't have to pay the same business rates and they're not subject to the same level of tax. So this reduction in business rates for high street stores definitely is good news for the high street. One potentially bit of negative news for some companies on the stock exchange is the new digital tax. So Hammond wants to charge more tax to overseas companies operating digitally in the UK, for example, Amazon, Microsoft, companies like that. And my colleague Tim Bennett, our head of education, has actually made a separate video specifically about this digital tax. So please do click on the link in the caption below if you would like to see more about that. And also this week we've had so-called Super Thursday, which is where the Bank of England announces its latest decision on interest rates and also its quarterly inflation report. So as expected, the Bank of England have kept the UK rate on hold at 0.75%. Again, like the Chancellor, it's very difficult for them to take any serious action before Brexit, so not at all surprising that they have left rates on hold. However, they did say that if we do get a smooth Brexit, then we could see a rise in inflation, and it will be then necessary to potentially raise into interest rates 3 times following Brexit. So they see the long-term rate as 1.5%. And if we have a look at the UK 10-year gilt yield, that tends to give an idea of where investors expect to see long-term rates in the future. And you can see it has been trending towards the 1.5% level. So that does tally up with what the Bank of England has been saying. However, on the other hand, the Bank of England did say that if we get a bad Brexit deal, they might even have to reduce interest rates. So that does really show that the Bank of England are pretty much as in the dark as the rest of us regarding how Brexit will go. Now, moving on to the week ahead, we are moving towards the end of earnings season now, but we still do have a fair number of companies in the diary. Next week, we've got Deutsche Post, we've got Amadeus, we've got AstraZeneca, and we've got the Walt Disney Company. That's it from us. Have a great week, and we'll see you next Friday.